Hello and welcome to a special update with Bell Potter Resources Analyst Regan Burrows to discuss the recent Global Uranium Conference in Adelaide that Regan attended. I'm Grady Wulff, Market Analyst with Bell Direct. Regan covers a number of areas within the resources and energy sectors with particular focus on uranium miners including Boss Energy and Paladin Energy. Regan, thank you for joining me today. You recently attended the Global Uranium Conference in Adelaide last week. What were the key ideas and takeaways?
Yeah, thanks, Grady. So the key takeaways from the conference, I guess, nuclear demand continues to increase across the globe, and the sort of where we are in terms of the uranium supply, we still remain significantly short uranium, both the immediate term and also the long term, and that sort of we see as dictating prices for uranium. And obviously the prices that feed into individual companies over the next couple of years. The second sort of big takeaway was Australia runs the risk of being left behind in the nuclear renaissance. And whilst that won't sort of dent our thesis for uranium, it will likely dent our power bills going forward. Australia remains the only nation in the G20 to have a ban on nuclear energy. I think we need to sort of focus on overturning the ban and open the discussion and the possibilities to nuclear reactors. It needs to be sort of had now, and politics is really the blocking issue there on that. And the third and sort of final sort of takeaway is it was an interesting one, and I hadn't quite looked at it much historically with nuclear as an option in the industrial heat segment of the market. So think of cement manufacturing, steel, and the production of ammonia, which goes into fertilizer for food. So this accounts for roughly 45% of global energy demand, and it's a difficult to decarbonize bucket. It's because renewables feeding through electricity is sort of not really where it needs to be to feed into this sector. Nuclear has an option to address this and thus reduce global emissions going forward. I thought that was quite interesting.
Now, at this conference last year, the prediction was the price of uranium will hit $100 per pound in the near term. Has the price outlook changed, or is it still on track for reaching this level?
Yeah, I mean, the ingredients are there. I think the risk is that we see a supply shock, and that given where sort of mobile inventories are and how tight the short-term market is, it's potentially not a question of whether it hits 100, perhaps when. So we're sitting at roughly $80 a pound currently, and that's up from $76 even a week ago. So all the ingredients are there.
Now, uranium really has risen the ranks on a global scale this year, both in terms of the price of the commodity and outlook for strong demand over years to come. Was this outlook cemented at the conference, and what was the prediction for the price in 2024?
I think last year, everyone, as you said, predicted prices were sort of moving in the direction to where they needed to be. I mean, the sector has been in the doldrums for the last decade and decade and a half at least. And the last 12 months has been a real vindication for a lot of the people in the room. We've seen uranium prices rise, and that supported a lot of their views. However, at the same time, I think we've seen sort of rising costs in terms of capital costs and operating costs feeding through from inflation. And a lot of those costs haven't been reflected in some of the historic work done on some of the uranium projects and mining projects across the board. I don't think that sort of impacts them going forward too much. There's sufficient demand and support going forward, but it's just sort of an alternative viewpoint. In terms of 2024, I think nuclear will continue to build on the momentum that we've seen over the last 12 months, and that sort of highlights the demand side. On the supply side, I think what's going to be interesting this year is we're seeing a return of some of the restart projects, and also we get a sort of chance to see how smoothly these restart projects run and how easy it is to get a uranium mine up and running. And I think that could cause a little bit of potential to cause a little bit of headaches, maybe.
Now, were there any surprising updates in the uranium space?
Yeah, certainly. So the conference has more of a nuclear skew to it historically. And there's a lot around technology, especially with the small modular reactors and also the micro reactors. And this space remains really interesting. It was pretty evident that the costs remain relatively high from a capital point of view for these deployments. But I think we need to look at that with the context of where they are in their overall journey. And also you can use sort of lithium ion batteries. If you go back a decade ago, what costs they were operating per kilowatt hour. I think SMRs could follow a similar sort of pattern over time. As I said, the argument is that they're too expensive and too late, but I think that's an immature assessment. And I think nothing is perfect in its first iteration. So I found that quite fascinating.
Now, how did the conference play into your analysis of the uranium companies you cover, including Boss Energy and Paladin Energy?
It's supportive, especially for Boss and for Paladin. The heightening risks around supply, sources of supply, is obviously coming through in higher elevated prices, and that benefits both Boss and Paladin, being they are near-term producers. These businesses will be able to capitalize on that momentum, particularly Boss, who is yet to sign a contract. They're yet to sign up any long-term offtake, which exposes them to the full weight of elevated prices. So I think that's an interesting one to watch going forward. And Paladin on the other side has got a significant portion of their offtake going to CNNC at pretty favourable terms there. So I think the analysis from a market point of view and where demand and supply is helps shape our understanding and our view for Boss and Paladin. It's quite positive. Watch this space. I think nuclear continues to build on the momentum over the last couple of years. I think people are really starting to take a view on nuclear as being part of the overall decarbonisation framework, and to put it into perspective about where the uranium market sits in light of that. Someone did a presentation on where uranium is and the market capitalisation of uranium companies across the globe, and it was something like 53 billion currently, and Cameco accounts for 17 billion of that. And at the time, the market cap of ExxonMobil was 410 billion. So there's a long way to go for an energy source that supplies 10% of the world's current electricity demand and is fairly green.
Regan, thank you for your time today, and we very much look forward to catching up with you again soon.
Thanks, Grady.